I think it's pretty easy to know whether someone's going to straight up suck or have a lot of success in the stock market. What I mean by that is if they do any of these three things, they're probably not going to be having huge months where they're outperforming the market. Instead, they'll be in an endless loop of making a little bit just to lose it all over and over and over again to the point where they're never actually outperforming the market consistently and instead just coming in right below every time. The third one I bring up might be a little bit of a hot take, but I think if you really want to make a lot of money, you should avoid all three of these. Now, the first one is obvious. We'll use Rich Tech Robotics as an example because I'm sure a lot of you have heard of it, but I see way too many people doing this, even though it's the number one easiest way to burn your money. You see a stock that looks like this, that's just on this huge run, and you buy in once it's at a peak, or even once it's up, 100 to 200%. You genuinely believe you are going to make money on that, you are cooked. We all know that the second it starts falling down, you're going to panic sell. Even if it goes and hits $20 or $30 within a couple of years from now, you're going to be out. Make sure you have a plan before entering any single investment and make sure that you're buying in before it's gone up. I know it's obvious, it's cliche, buy low, sell high. I take that extremely seriously. I bought in at 177, which is almost the lowest it got, and I took advantage of this whole run. Just like I do with all my other stock investments, I'll buy in before they start going up. The second one is even worse. This is just a waste of your time. If you're spending a lot of your day looking at penny stocks like Buru, it doesn't even matter if they're up that much. In this case, Buru's up a lot. You're actually taking time out of your day or week to just keep getting into the latest TikTok penny stock. It's like under $1 or close to $1, and then when you zoom out to the large time frame, it looks like this. You're cooked. You're never going to do well because you're always buying things based off of hype, and you're always going to be late to the party every single time. I did say the third one is controversial, but I do stand by it as well. You're super heavily invested into these dividend stocks that have just a massive yield. In this case, looking at a 6% yield that actually got increased recently, but it's a stock that has no great plans as far as growth. You're never going to outperform the market because you're going to be stuck collecting a pretty good dividend yield, but the stock price isn't going to go up that much. So yeah, you could be living off of dividends, but you're going to be making much less than the average investor in the S&P 500. So I avoid all three of those things and instead focus on dollar cost averaging into undervalued stocks before they explode. Here are some of the stocks I've closed already this year. You'll notice that every single one of them had a ton of upside potential when I was getting in. That's why I'm up 132% on cash invested this year. I'm currently buying 10 stocks, but I'm also in another 10 that I'll just buy more as soon as they drop. So if you want the full list, comment the word trade and I'll message you.